Good afternoon, ladies and gentlemen, and welcome to the next installment in the Admiral Markets Trading Spotlight webinar series. And here we are today to talk about, are we in a tech stock bubble? A fascinating question, certainly, especially where we are here, just in the kind of final run-up towards the US election. So lots of elements in play, lots of fascinating stuff to take a look at. But yeah, we're going to look at that. And please, if you're watching this here with us today, and if you have feelings and thoughts on whether it's a tech stock bubble, maybe you think it is, maybe you think it's got plenty of room to go, would love to hear it. If you're a particularly active trader investor, if you've had some interesting experiences this year, please put it in the chat box. Or if you're watching this later on demand on the Admiral Markets YouTube channel and you've got questions or thoughts, please pop them in the commentary book. If you find this useful, give us a like. If you've got thoughts about topics you'd love us to cover in the future, please, by all means, stick it in the either the chat box or the commentary box, and we'll be very happy to take you up on that. So, what we're going to talk about today, what's our agenda? Well, where we sit here at the start of October 2020, well, we have seen some stunning moves in markets in general, but also in US tech stocks, okay? And I suppose the question, that links in today is, has it gone too far, okay? Has that move that we have seen since the sort of kind of lows of March, has it gone too far? Is it done, okay? Or are we just taking a breather before we make our next leg up? That's, as I said, lots of kind of interesting debate and opinion on it. We'll also a little talk about, how do we define a tech stock bubble? How does it occur? What actually is it? As always, I appreciate we have a wide range of people joining us here in the room, from complete beginners to very, advanced and experienced traders. So, we're going to talk a little bit about tech stock bubbles and how definition and how they grow. And then most importantly, okay, as traders, well, then, how do we turn it to our advantage? Okay, are there a couple of things that we need to be aware of, that we can work with, that we can utilize, that can help give us a little bit of an edge in this particular rather interesting environment that we find ourselves in? So about me, my name's Paul. I've traded for many years now and coached and mentored traders over the years as well. Primarily for my own trading, okay, I like to focus on FX indices and commodities. I look to be kind of a trend trader for sort of longer term trades, and mean reversion or reversal trader for intraday trading. And as you can see there, Admiral Markets provide a wide range of financial instruments that allow you to engage with markets. Okay, they have clearly a global reach, and they are licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular products and allowing you the ability to engage with markets using either MT4 or MT5. If you have any questions about Admiral Markets, please get in touch with the account representative, and they'll be very happy to help guide you. But we're here today to talk about, are we in a tech stock bubble? So it would be interesting to know, those of you joining us here today, how many of you actively trade or invest in the tech stocks, whether they be, the big major US ones, or, just local tech stocks which you take an interest in. If you've got any experience there, okay, if you've got any particular stories to share, then please, by all means, we'd love to hear about it, and drop that in the chat box there. But as it says there, we recently looked at trading the US tech sector in one of our recent trading spotlight webinars, and my assistant might be able to put the link up to that, okay, for you to be able to watch that later if you so wish. And I can, of course, thoroughly recommend that you do. And not unsurprisingly, we have seen quite a kind of storming rally, especially in the US tech sector, since that crash of kind of early sort of February, March 2020. It's been absolutely stunning. And the question is, as we say, are we now in a tech stock bubble, ladies and gentlemen? What do you think? Okay, put your hands in there, okay, and just in that chat box, just let me know if you think, just simply yes or no. Maybe you think yes, we are. Maybe no, we're not. And that's fine. This is great. This is the kind of opinions and interaction that we always enjoy. So in this session, we're going to look at the tech stock sector and discuss whether, after such sterling moves, after such absolutely fantastic moves, are we now in a bubble? And if so, well, what can we expect? So I think it's Marcellinus who says, yep, they're trading tech stocks, so it'd be great. Let us know what your experience is. Opera says, I only trade CFD, Forex, and gold. Absolutely. And as Opera says, I'd need to see a chart. Don't you worry. Okay, there will be charts. There will be charts aplenty. We're going to look at charts here, and then if at the end of time, I'll switch across to MetaTrade, and we can have a look at some tech stocks. So stay with us till the end, so we can actually just look at the actual stocks themselves and start having a bit of an insight into their performance, okay, how they've been playing out, b, how they're going to do so for the remainder of 2020 and perhaps beyond. So, as I say, we always have kind of a complete range of people here, and I appreciate there'll be some people joining us today or watching this later who are completely new to trading and investing and might not even really fully understand, what makes up the tech sector. So, as it says here, the technology sector is the category of stocks relating to the research, development, and/or distribution of technologically based goods and services. This sector contains businesses revolving around the manufacturing of electronics, creation of software, computers, or products and services relating to information technology. The term technology sector is frequently shortened to tech sector and is used interchangeably with the term technology industry. Because of the pace of innovation, the tech sector is often the most attractive investment destination in any economy. The tech sector is very good at creating a buzz about its endeavors, which attracts investors. And so, whilst we're going to look at the tech bubble generally, it is led by the US tech sector, okay? And, we will be able to focus particularly on that. And so, as I said, we did a video, in fact, it was myself who did it, about a month or two ago about trading the US tech sector. So, by all means, find that in the sort of the webinar archive, and you'll be able to sort of watch that and understand it at greater depth. As I said, I appreciate we always have a wide range of experience in the room. We try to cover all aspects to help everybody. So, how would you analyze the US tech sector if you're going to look at, engaging with it either as a trading or as an investment? Well, I would look at it as, there's two kind of main ways you can analyze the overall sector. All right. So you could look at an ETF, an exchange traded fund. And once again, I think my colleague Jens has done a couple of webinars there based on ETFs and understanding exchange traded funds. So once again, you'll find them in the webinar archive. Please take a look at them and find them. You can look at the ETF, which is coded IYW. And you can also look at the overall index. Okay. And invariably, that means you're looking at the Nasdaq 100. All right. So Nasdaq 100. Okay, seen as holding the 100, biggest sort of tech stocks by size and market capitalization. What we are fortunate here with Admiral Markets is that the Nasdaq 100 is available on both Admiral Markets MT4 and MT5. You'll be able to find it under the NQ100 ticker. So you'll be able to find that, and I'll show you that because, as I said, if you're complete new beginner, you can look at that. So if you wanted to have just a big picture overall, maybe you're like a long-term investor and you wanted to understand the US tech sector, as I said, you could look at the tech sector ETF, or you could look at the Nasdaq 100 overall index, and we will do that. Okay, we'll have a little look at that shortly to have a look at how that's playing out live, because it kind of feeds in to some of the comments we're going to talk about later in this particular presentation. So this is when I did this chart. Okay, here it's effectively this is the Nasdaq itself. This is the MT4 version of it. As I said, as you can see, it's NQ100 there. This is a daily chart. For those of you who've joined me before, my charts are quite simple. Okay, I just have green bullish candles, red bearish candles, a blue 20 period moving average, a red 50, a green 200 fractals, and then I will also draw in particular levels of support resistance or particular sort of big round numbers or particular patterns. So in this particular case, we saw here, let's bring up the old drawing tool to help. For those of you who will remember or have joined us, this was January, February, of this start of this year, and we thought we had seen quite quite a meteoric rise. Okay, Nasdaq, it had been breaking to sort of all-time highs, and then towards kind of January, February time here, what happened is we saw that as coronavirus exploded out of China, okay, and then went across the globe, and the impact that had on stock markets. Well, you can see we had an absolute collapse there as nations went into lockdown, and so we came down to these lows here, okay, towards the end of March, but you can see what's happened here, okay, in that preceding period, or that period between kind of end of March and sort of August and September, has just really just been quite a meteoric rise, quite absolutely astounding. Right, from being down there lows at around about from what was around about 6,600, we went all the way up to around about 12,600. Okay, just under doubling. All right, just under doubling in price and value in over like a 5 to 6 month period, which is just just astounding, especially based upon when you consider what we were going through. We were going through particularly almost like a global lockdown as part of dealing with COVID. So to see that is absolutely astounding. And what I've got there is I was just drawn on there. Okay, the big red number, psychological number of 10,000. And you can see here that the price did have a little bit of a wobble around it. Okay, there was a little bit of a reaction to it, but then bosh, off it went. Okay, and as I said, went up there above 12,000. Okay. But you can see there, September wasn't a fantastic month for the Nasdaq. Okay, and we're going to touch on that later. Okay, as we sort of explore the overall topic of whether we are in a particular US tech stock bubble. And as I said, if you've got a thought, or if you've got a view, all right, if you've got an opinion, stick it in the chat box. We always love hearing it. Okay, and it's always interesting to get that interaction and those opinions from people. And there are no right or wrong opinions. This is what makes a market, but it also sometimes helps just to hear what other people's views and experiences are of trading those particular US tech sector. So Opera says, yeah, you have 3 moving average. Please, which level? As I said, there, blue is the 20 period, red is the 50, and the green is the 200 period moving average. And you'll also see my wonderful assistant, okay, has put a link in the chat box there for how the video that we did in Trading Spotlight about trading the US tech sector, should you wish to watch later on after this, which of course I thoroughly recommend. So, when we look at, what makes up that US tech sector, as I said, they look at that kind of, Nasdaq 100 being the 100 biggest companies. But what we also see is that US tech sector boasts some real household names. Okay. So like Facebook, Amazon, Netflix, Google, or its parent company Alphabet, Microsoft, Apple, and that should be Nvidia. And the reason I mention those in particular is because they have become the sort of basis of quite a a kind of almost like a little mini sector within a sector in terms of looking at some of the really quite huge, quite astounding stock moves, which are quite often known as the Fangman stocks, right? And they are popular at this present moment, and they are seen as as I said, almost like a sector within a sector. They're kind of the sort of the powerhouse of those kind of US tech sector, and we'll look at their charts in a moment myself. Okay, so you might be aware of it. In fact, if you've heard of Fangman, okay, that's great. Okay, maybe you already actively trade Fangman, because there are lots of people these days who will actually just basically trade those Fangman stocks because they have such such volatility, such liquidity. All right, and there are have been some fantastic moves. Okay, and it's that in itself, there's a fascinating kind of undercurrent about what's actually occurring in those markets at the moment, and we're going to touch on that in a few slides time about how we view and see these. So, what we have done is, we covered this in more in depth on the Trading the US Tech Sector webinar. But, several of those US tech stocks are tradable instruments with Admiral markets. You'll find them on the MT4 platform, on the MT5 platform. So, with that in mind, if you talk about, we created our own kind of like little mini kind of Fangman profile. All right. So, not unsurprisingly, using Facebook, Amazon, Netflix, Google, Microsoft, Apple, the Nasdaq itself, and we put in Tesla as well, okay, because Tesla has been of interest to traders, right? And, you could debate, okay, is Tesla an automotive company or is it a technology company? I personally would view it as a technology company. Others might view it differently. Okay, so we've put that in there just because it's been such a fascinating stock to watch over the last year or so. So we can have a little look at that, and I'll show you where you can find them on the Admiral Markets platform when we switch across at the end of the slides. But invariably, what it is that I've created myself a Fangman profile. Okay, it's a bit of a US tech profile. I'll show you how I did it on MetaTrader in a moment. But what it does is it just allows you the opportunity to very quickly scan those, really, as I say, those kind of major stocks that are almost kind of like a mini sector within within that tech sector. They have really been the powerhouse. Okay, this year it's been just astounding to look at their kind of those stocks performance and see how that has actually played out. Then, of course, in the Nasdaq. But as you can see there, okay, that's what we've just done. There, I've got I think these one the weekly charts here. So you can see I've got Facebook, Amazon. Oops, excuse me. We'll just go back there. Just 1 second. Oh, there we go. Just doesn't want to do that. Once there we go. Apologies. So just a bit too sensitive on my mouse there. But what you have there is Facebook Weekly, okay, Amazon, Netflix, Google across the top. Then I've got Microsoft, Apple, the Nasdaq, and Tesla. Okay, so as I said, that's about setting up a profile. So very quickly, I can take a view on how those major stocks are doing, what they're actually doing, what their performance is like, and how that's reflecting on the American, the Nasdaq, which in itself has a reflection upon the US indices in total. And then at the moment, that also has a huge driving impact upon just the global economy. All right, so which we'll talk about in a few slides time. So, that's what we looked at Fangman profile. But as I said, we'll switch across to the charts in a moment. I'll show you that and how we can use that to our advantage. As I said, you appreciate there'll be some people here who are just completely new to trading, investing, trying to understand it. So if you think about well, what is a tech sector bubble, right? Well, what's the definition of a tech stock bubble? Well, bubbles often form when excess capital, normally in the later stages of the credit cycle, finds its way into saturated markets. Investors are desperately chasing a profitable return. There is a heightened expectation of the future. Very often you'll hear the comment of, this time it's different. And usually this can be seen as a surge into IPOs, initial public offerings in tech stocks. And very often a lot of these will fail. Now, I am old enough, okay, to remember the first kind of internet stocks bubble back at the end of the 90s, and it was they kind of play out kind of the same, all right, because human nature's the same. It's a case of as we saw there, and as we've seen a couple of times over the last few years, is that there has been excess capital, right? We can talk about how that has been created, through the credit cycle. You can talk about it how over the last 10 years, in terms of just basically central banks creating money, pumping money into markets, and that has to find a home, okay, because investors are desperately chasing a profitable return. They're always chasing alpha. Okay, they're always looking for a profitable return. If you're a big hedge fund, okay, you're a big sort of a bank, okay, or an investment fund, what have you. You're not getting paid your fees and bonuses unless you create a profitable return for your clients. So invariably, people, that kind of money has to find a place to go. It has to find a home. And there is that so much money that's sloshing around the kind of the system that invariably it finds its way into saturated markets, because markets are already quite saturated from what however that excess capital has been created. But what we find is what we've seen a few times over the last 20 years, okay, is that we see that money coming into the tech sector because it moves at such a fast pace. It's so exciting, okay, it creates its own buzz that it basically draws investors towards it, okay. And invariably, we are all wooed by new forms of technology that are deemed to be going to change our lives. Okay, so whether that be a smartphone, or whether that be 20 odd years ago to the actual sort of just creation of the internet and as a commercial proposition. So, and what we always see is that, these markets, we see a surge in those particular tech stocks that are already available, but also we see money kind of pouring into initial public offerings. So, tech companies that have started up and they're looking to go public, and then invariably that's all about creating buzz. That's all about creating sort of excitement about it. People pour money into it, and it just becomes a kind of a self-fulfilling kind of prophecy. The challenge is that, as we saw definitely, kind of back in 99, 2000, 2001, I remember it well, is that, most often, these kind of, most of these IPOs actually fail. Okay. They don't go the way they do. Okay. Especially towards the end of it. All right. And it can be a rather, a challenging period. Okay. For kind of newbie traders and investors. But, this is, how these bubbles are created. And that's what we want to just be able to educate kind of new traders on how we see that occurring. Well, when we start hearing people talking about tech stock bubbles, well, how do we see it in the markets that we look at? Well, as I said a bit earlier, it occurs after a long and unsustainable rise in technology stocks, right? And as we'll look at the moment, can we look at the charts? Okay, you'll see that those stocks have been in a pretty long and unsustainable rise, for the last couple of years, but actually also that has just accelerated since about March of this year. What we see is things like the rapid share price growth, which we've seen, but also exceedingly high valuations, such as price to earning ratios or price to sale. They characterize that tech stock bubble. Okay, so if you look at some of the PE ratios of some of these tech stock companies, they're just astounding. Okay, it just doesn't make sense. Okay, it's just completely out of the of what we would deem to be the norm. But the thing is, what happens is, once that kind of those markets or share prices, once they start, they start to go parabolic, they start to almost go vertical, some of those prices, and they break away from their kind of long-term means. Well, then, then we are in a bubble. We are exceeding those expectations, and invariably, there's nowhere left to go. Okay, there's nowhere left to go once everybody's on board. Once it's created so much buzz, so much excitement, everybody is putting their money into the tech stocks. Well, then there's it gets to a point where there's nowhere left to buy, and invariably the big boys are looking to actually try and sell out because they have to take care of their profits. And as it says there, a crash is likely once investors realize that their heightened expectations will not be met, and they start to get out of their positions. And it's kind of a domino effect. Once a few of the big ones go, then you'll start to see like a domino effect kind of flushing out through that particular sector. And we have seen examples of that, okay, over the last few years, but perhaps not as much as maybe we saw in February and March of this year. But as I said, we will look at those particular stocks in a moment. And as it says there, but Paul, this time it's different, and that's once you hear investors telling that to you, that invariably, historically, it's the worst phrase you can hear. Okay, normally it's a very great contrarian signal, but what has been different this year has been the fact that what has driven those market moves was something like the global lockdown to COVID, which let's be honest is something we've not really experienced, not at the kind of the scale and the depth and the length as we have. Certainly as far as I'm aware, maybe some of the historians watching us will be able to sort of give me some insight on that. But it's as it says there, the events of 2020 have driven differing behaviors in asset allocation. Okay, post the COVID crash of February, March 2020, we saw a huge switch into tech stocks, and in particular US tech stocks, which we sort of we just saw just astounding price rises. Okay, to the extent that we now see certain US tech stocks or almost acting like sovereign bonds, okay, and how some of these companies have more cash than some nation states, and that's what you have to think about, okay. Everybody here in the Western world, again around the world, was basically locked down at home, and their only way their interaction was actually using technology, okay. Whether you're using Zoom like this for me to be able to talk to you, okay, or be able to talk to your family, or be able to conduct your business, or maybe you were just buying everything from Amazon. Maybe you were buying buying, stuff from Apple. Okay, maybe you're buying, like me, getting an Apple Watch. Okay, or you got an Apple phone or Apple TV. Maybe you bought a new tablet or a new computer because you're working from home. Maybe you were just buying your food online. Okay, through technology. Maybe you're getting your local supermarkets to deliver your food for you. All of this driven by some of those huge, big US technology stocks. And so invariably, in a world where everybody's uncertain and nobody really knows, what's happening, well, people start to look at, where can I put my money? Where will my money, A, be relatively safe, and B, where am I likely to actually get a return? Remember, those kind of big funds, those big banks, okay, they're not really allowed. Don't get to sit on the sidelines as much as they want. They normally have to be engaged. They normally have to be invested. So, if governments are struggling, governments are kind of changing because of, they're dealing with the COVID, well, then, not unsurprisingly, lots of people, okay, from both, retail traders up to, huge, big, mega, funds are investing money into US tech stocks. And, and it just creates its own momentum. And it just basically is, sucked in, all of huge amounts of available cash, okay, from people's asset allocation. But what we saw here, as I said, let's just use my drawing tool here. So this was here, okay. We'll look at them. We had great big price rises there. Okay, we've been absolutely going gangbusters. For want of another word, until, as I said earlier, the kind of COVID started, the realization that invariably it was going to hit globally. Okay, there would be lockdowns, and you can see what happened there. Okay, we were just under 10,000. Okay, around about 9,700, and we dropped to around about 6,600. Okay, so we had a 3,000 point, 3,500 point drop there in a month. Okay, which would normally just be absolutely it would be astronomical, astounding for people, and it was okay. But what we saw was a complete turnaround. Okay, once we created this higher low, and as I said, we just shot off. Okay, and this is Nasdaq, which is representing those 100 biggest tech stock companies. As I said earlier, we had a bit of a bounce around about 10,000. Okay, that big round psychological number. But what we did was we effectively fired its way up there. But as I said, just take a note of this. Okay, start of September. What we had was, real few days. Okay, we had a bit of a week of some real falls there. Okay, and just kind of working its way back down into around about sort of Nasdaq into around about that kind of like sort of 10,600, 10,700 area. Okay, and now we'll look at the live chart. We'll identify. But September wasn't wasn't a great month. It wasn't continue that kind of end of March to August. Okay? So through April, May, June, July into August, we had those kind of 5 months of just unbelievable price moves. But as I said, just look at that daily chart for September there. Okay, it's not that's not reflecting there. Okay, and we'll look at that live, and we'll just talk about that in the next slide or two. So, we have to get to that question of, are we in a bubble? Well, and this is personal opinion. My personal opinion is that we've definitely been displaying those telltale signs of being in bubble territory for tech stocks, okay, and US tech stocks in particular. Okay, you only just look at the chart of the Nasdaq there. We'll have a look at a couple of the individual stocks. Everything is showing that the kind of unsustainable kind of price share price rises. Okay, is just definitely taking us into kind of bubble territory. But as we just looked at there, we talked about during September. We did see price action start to roll off its recent highs in the index, and also the same in the individual stocks. Admittedly, along with all of the major indices. Okay, and we will look at that. Okay, nobody trades in a silo. Okay, and that even includes those kind of major indices. Where there's such an interconnected world, courtesy of technology, that it has these things have ripples. Okay, and we shall look at that a moment. So you have to ask that question. Have we been in a bubble? I would say yes, we have. Is that the bubble bursting in September? Well, that's the question, isn't it, ladies and gentlemen? All right, is that the question? Is that the bubble burst completely, or is it that canny investors are taking profits off the table in the run up to the US election? So when I do this, I'm delivering this here start of October. The US election is in November. We've got about a month, okay, a month to go. It's It's been a mad, crazy year, and I think it's going to be another few weeks of mad and crazy. Okay, wherever you may be, whatever's going on, it's going to be a crazy run up to this U.S. election. And is it a case of what it is the kind of canny investors are just sort of saying, right, I'm just going to take my money off the table. I've made some great profits. Am I taking that off the table until after the US election, until we get that clarity? All right. Remember, markets hate uncertainty because, well, markets still, even with all the technology that's employed, in trading, markets are still, they're still a reflection of human psychology. Okay, they're still driven by human behavior, and people are uncertain as to who will win that US election. And when they have that uncertainty, well, people just sort of taking profits and thinking, well, maybe I'll sit on the sidelines for a couple of weeks and just to work out what on earth is actually going to turn out in the from like November 3rd. So and once again, as I said, this is my personal sort of thought, and this is that personally, I think we're seeing three elements in play to demonstrate what we're seeing in individually in tech stocks, but also in Nasdaq, and also you could say across the wider range of both US indices and also global indices, which will have also their local national tech stock companies in there. Personally, I see that what we saw in September was we saw that re-emergence of COVID second wave. Some people might call it third wave, whichever wave you might wish to call it. Okay, we saw a re-emergence of it in September. Okay, we've seen those kind of numbers spiking up, and certainly here in the UK they have continued to spike up. And certainly here as I speak, there is talk about us going back into a national lockdown during October. That in itself is, once again, it's an element of uncertainty. Okay, it's an element of uncertainty. People won't like that. Okay, and so that will people will take profits off the table from their particular investments, and that would include US tech stocks and tech stocks in general. But you might say, well, Paul, but we did well in the first lockdown because everyone was buying technology stocks. Would that happen again? That's a distinct possibility. That is a distinct possibility. If we go back into a national lockdown and it goes on for the period that we saw earlier this year, I would not bet against that. Okay, but so we'll just keep that keep that at the forefront of our mind at the moment. Secondly, I think what we saw during September was profit taking after the run from March to August. Okay, some fantastic runs there. Okay, you can look at the charts. We'll look at them in a moment. They're absolutely stunning price runs. Okay, and people will want to take some profits. And I said, finally, positions being trimmed ahead of the US election. Okay, so people might still have an investment, but they might have just taken some profits. Again, they might have just squared their positions, either squared the positions or maybe just reduced their exposure because there is uncertainty. All right, and so for October 2020, I expect to see some volatility spikes based on the US election. So even as I say this, on sort of Friday morning. Okay, Friday morning we saw Mr. Trump saying that he had COVID and he was going into hospital at the end of the day. Then, of course, we had NFP numbers there on Friday afternoon, and that created a little bit of a spike drop. Okay, all right, because people deem that to be bad. It's uncertain. Humans hate uncertainty, and invariably, what we'll see is already Mr. Trump saying that he's working, he's fine, blah blah blah, and that will have another impact. And what we're going to see is for the next, I think it might be sort of just under 30 days, okay, is that as we have the US election debates, as we see the two candidates and their campaigns making comments about what they plan to do should they win the election, that will invariably have a dramatic impact on both stocks in general, okay, tech stocks, and also the US tech sector. Okay, so Mr. Trump has made comments in the past, okay, about his concerns and his worries, okay, about the US tech sector and effectively the depth and level at which they sort of interact and sort of prey into our own private lives, and also the power they have and the kind of the amount of data they accumulate on us all. So invariably, that will make people particularly nervous. So my own view is that I suspect we will see a kind of a period of consolidation for the next few weeks, with the odd spike up and down based upon what those candidates said, and then I think what will happen is the next major move in tech stocks will occur once that US election is decided. Now, that in itself is talk about, how they're going to decide that. If it's too close to call, that will be a fascinating way to see. We will all have to wait and see what that brings to the party. But I think what we'll see is we'll see an element of consolidation, okay, with the odd spike, and then people waiting to see, what kind of result do they get in November, and if they get that number, okay, will that be good for the tech stocks? Okay, so some people would say a Trump win would be very good for tech stocks, because what that would do is it would be just the same as business as normal. Okay, there would not be the particular change. People know what they are dealing with, and that might be good for particular certain tech stocks. Okay, as it works. Alternatively, there'll be some people who say that actually a win for Biden will be better, because Biden is more popular. Okay, he's a more popular individual. He will have a very different view of how to negotiate with China. Okay, remember that we have not only China tech stocks, but that some of these companies will be their products are sort of made in China. Okay, so invariably a return to, let's say, the kind of laissez-faire trade negotiation and trade style between US and China that occurred before Mr. Trump. Well, that might actually be seen to be good for US tech stocks as well. So there is arguments for and against both of these particular candidates, and what will happen is I think that will become clearer over the next few weeks, and as it does, that might have as I say, a reflection upon how those the tech stock sector moves once that US election is decided. So, in conclusion, ladies and gentlemen, the tech sector has been a very popular investment sector, right? People will focus on the US tech sector to take their lead, okay, because it's the biggest tech sector, okay. It gets the most coverage, not only in terms of investment, but also in terms of media coverage as well. Okay, it takes the lead. Presently, the Fangman tech stocks have been immensely popular, and we talked about that earlier. During 2020, there's been immense attraction for buying US tech stocks after the COVID crash, and we saw the Nasdaq chart that how immensely popular they were for a good portion of certainly over the summer. And this has taken a life of their own behavior. All right, and it's unbelievable when we look at some of those individual stocks, which we can do. However, in September 2020, we saw price move off recent highs. Okay, price certainly came off. It wasn't a crash, but it was certainly kind of the bubble was deflated, right? And the US election will help decide the next move in that US tech stock story. So it's a case of keeping your powder dry and being ready to sort of take a position once we get some clarity on who's the winner of the US election. So let's take a little look at the charts. Why don't we, ladies and gentlemen? We've got a few minutes left, so let's go and do that. So, as always, ladies and gentlemen, we appreciate that trading's a lonesome endeavor, and you might want more support and help. And for that, we've created the exclusive Trading Spotlight community, so you can join me, who I'll be there this afternoon, okay, and then also my colleagues Marcus and Jens. You can join us on Traders Yard, where we have our own community. Join the Trading Spotlight group there, tradersyard.com/group/312. And don't forget to join us next time, okay, when you'll see my colleague Marcus, who on Wednesday is going to be talking about, what is going to be the market reaction to the US election 2020, including who will win the election. Is it be Biden or Trump? Taxes and a market reaction, Trump victory or a contested election. And that'll be on Wednesday, 7th of October, 2 o'clock London time. Check your inbox for the webinar link, or head over to the admiralmarkets.com page to register for these live webinars. And, for more analysis and education, well, you can go to the admiralmarkets.com website. You'll find lots on there and lots of resources there that you can utilize. And if you want to contact us, well, you can do so. You can email there as at global@admiralmarkets.com, or youtube.com/admiralmarkets, or watch facebook.com/admiralmarketsglobal. Well, I hope you found that useful, ladies and gentlemen. Just give a little bit of insight into the tech stocks. Has it been in a bubble? Has it crashed? What impact will the elections have on it? As I said, we've got a few moments here, so if you'll bear with us, we'll just switch across to the charts, and I'll show you how I've set up my profile and what we can have a look at, and a look at some of those particular tech stocks. So if just bear with us a moment, we'll switch across. Okay. So here we are. I'm hoping you can still hear me. Hoping that you can still hear me, still see me, that you can now also see the Admiral Markets MetaTrader. And as I said, I have a profile here for the US tech sector. And as I said, what we've got here is we've got Facebook, Amazon, I've got Netflix, Google, Microsoft, Apple, the Nasdaq, and then a bit of Tesla as well. So, you might be able to see it on there. If I just kind of let's have a look at kind of a couple of the interesting ones. So, not unsurprisingly, I'm just going to look at Netflix here, okay? And the reason I'm going to look at Netflix is this is the weekly chart. Let's go down to the daily chart here, and what we're looking at is a case of actually maybe the weekly chart might be better. Is that we can just zoom in here and see that Netflix for the last couple of years. This is a weekly chart, okay? If you look at last year, okay, the last couple of years. It was kind of, bouncing around there, okay, between, in a ranges between about $240 and $400. But actually, we had the COVID crash, and then not unsurprisingly, okay, everybody got locked down, and what did we see? Well, we saw an increase, and people were buying Netflix services because everybody's, if you're on furlough, unfortunately, I wasn't. Some of us were working very hard during the lockdown. All right, so but if you're on furlough, lots of people got sent home, and they were just sat home watching Netflix, okay, at home, and that of course had a huge impact and drove the kind of the share prices back up to that, $575. But now, what we see is, if I just go down to the daily chart into September. Well, as I said, September was a bit of a takedown, but as those COVID numbers have increased, all right, people have started to think, well, okay, is there going to be more lockdowns? Are people going to be once again still stuck at home for the next 6 months looking at over it? And of course, that has an impact. That's good for, it's terrible for our lives, but it's good for Netflix. Okay, so of course, invariably, that makes people interested in buying particular Netflix stocks. And if we look at the overall index, okay, Nasdaq. Remember what I said earlier is that this is on the daily chart, and you can see for yourself, okay, from the lows there, just stunning, absolutely fantastic. But then we fell away here in September, and now what we're seeing is we kind of had a little bit of a rally into the last few days, but then of course with Mr. Trump, being declared positive for COVID, what we saw was a bit of a drop there, okay, on Friday, and now we're going to be in a bit of a position, as I said. And my own view is personally is that I think that we'll probably be in a range there between around about maybe I don't know, perhaps kind of maybe sort of 11,900 and around about 10,500. I think what we'll see is a bounce around there, okay, until into November, and then perhaps maybe there'll be an initial drop down to about 10,000, okay, because we get a little bit of certainty depending upon who wins. But I think that, as I said, for October, it's a case of consolidation, and then people trying to learn and understand what exactly who is more likely to win this particular upcoming election. And what we can see is that if we look at let's say Apple, the weekly chart, this was just quite something here. We'd already pushed to new highs here at the start of the year. Pushed to new highs start of the year. We had the COVID crash, finished by a real big, what they call momentum reversal swing candle, and then Bosch. We pushed up again, okay, and what we had was a case of as price pushed up. Well, then invariably what we had was we had a share split, and price was recalibrated. Okay, price was recalibrated. So that will have thrown people out an element. Okay, but for the most part, if you're a long-term investor, it was very, very good time to have an Apple, and we saw that in Tesla as well, and we'll have seen it in other stocks, okay, as well as those prices get just a little bit too inflated. Well, then the boards of those companies might look to basically do splits, okay, and effectively split the sort of the share pool, all right, in order to effectively help the board help themselves to better bonuses. Invariably, that's what normally occurs. So anyway, unfortunately, ladies and gentlemen, as always, we've run out a little bit of time there. Okay, so hopefully hopefully you found that useful. It's giving you a little bit of insight into what is a tech stock bubble. Are we in one? And I'd say yes, we are. But it hasn't crashed. I think there's just been personally an element of profit taking, from after the great run, a little bit of uncertainty, okay, because of the reemergence of COVID, and also we've got the next 30 days of the US election, which is going to provide sort of some sort of levels of volatility spikes as we hear what those candidates have to say for themselves. As always, I wish you the best of success in your own trading. I look forward to hoping you join me here next Monday afternoon. We'd be very welcome, okay? Or if you want to join me in Traders Yard this afternoon, I'll be there to answer your questions. And by all means, join my colleagues Marcus and Jens for their webinars later on this week. So have a great trading week, ladies and gentlemen, and I will speak to you soon. Thanks.